it's critical when we're making a trade to manage risk. And the standard way to do that is to estimate what a win and a lose are. So when entering a trade, we first estimate what we hope to win, Xwin, and how much we can lose, Xlose. So maybe the market will keep going down beyond our stop loss, but we're gonna get out if it breaks below that. It's too rich. You don't want to hold on to a losing trade. So typically we want Xwin divided by Xlose to be greater than or equal to 2. So basically 2-to-1 odds if you're betting on a horse. Since then we only need to win 1 in 3, even though we expect to win more than 1 in 2. So if Xwin is more than twice Xlose, we can lose. For every time we win, we can lose twice and we break even. And as I said already, when we're placing the bet, we actually think most likely we're going to win. That's the kind of bet I like making. This gives us lots of room for error, as in we can be wrong often but still can come out winning. I'm just going to look at an example to see what I mean. I mean, what am I talking about when I say estimate win, Xwin and Xlose? The trade actually that I've been following is, well, I'm short the DAX, and I've seen that when it tries to bounce up, it seems to be held below the brown line. The brown line here is the 20-day moving average. Except, of course, this is where each candlestick is a 15-minute interval, so it's actually the 15-minute interval moving average. So it's the 20 close, so it looks at the closing price at the end of a 15-minute interval, and it averages 20 15-minute periods closing price to get the average value for the brown line. And we can see, when it's falling, the brown line seems to be containing it, which is often the case. It wasn't a random average I was looking at. So the trade I'd be making is I'll wait till it reaches the 20-day, or until it reaches the brown line. Okay, so at that stage, when it's at the brown line, we can see the DAX was at 11,305. So then I have to decide, what is my stop loss? Typically, off the top of my head, I'd kind of go, okay, maybe 20. I'm not risking that much. Or I could look at the next one. I could kind of go, okay, here it was 11,305. It went all the way up to 11,313, maybe 315. So I only needed 15 as a stop loss if I was historically looking at it. So say I'm here and I look at the previous time and go, well, so far when it's tried to go above the brown line, it's barely made it. So here I'm going to wait till it's at the brown line and then I'll go short. But actually I'll just go back to my original example. So say I went, I'm going to risk 20. So I wait till it hits the brown line and then I go short. So if that means that X lose is 20 and I want X win to be at least 40. So then I'd have to decide, well, I could either decide I'm just going to go for double. So I'm going to take 20 and I'll take X win to be 40. So then if I'm entering at 11,305, I want to get out at 11,265. So I place that order and fingers crossed. And who knows what's going to happen? I mean, this could be, oh, the market's turning around and it'll shoot up. We don't know. As it happens, the market keeps going down and it goes well below 265. So I take my profit less than an hour after. Then I can wait and go, okay, I'm going to do it again. So I wait till it goes up here. Did it actually ever touch the 20-day, or did it touch the brown line or not? I'm not that sure. But I might look to short it at this stage. And again, put a stop loss 20 above. This time, maybe go, okay, yeah. So I could again go for, I'll take a profit of 40 and I'll risk 20. If I did exactly what I was talking about, you know, if I went for, I'll risk half what I hope to win. And again, I would win because the trend is still holding as it turns out. So if I went short here at 11,263, and again I'm looking for a 40 euro profit, so I'll get out at 11,223. And I went rapidly, you make the money. Another way I could be looking at it is, okay, the market began like this move, the low is 11,192, so it's gone all the way up to 263. So it has maybe, yeah, the gap between here and here is basically 70 euro. So then I could be betting, okay, I think since we're in a downtrend, the market's going to fall back down to this level. At least it's going to test that. But since we're in a downtrend, I expect to be hitting lower lows. So I expect to go further than that. But I could go, oh no, I'll just short at this price and I'll take profit when it hits 293. So I know what X win is because my target is the recent low, and then I'll put a stop loss which is half that. So if this is 293, so if I have a 70 gap, if Xwin is 70, I'll risk 35. So if it goes 35 above here, I'll take a loss. But if it hits this, I take profit. So there are frequent opportunities to make these kind of trades, and you only need to be right 1 in 3 times to break even. So, and you're not that emotionally, or you're not that committed to any one trade, because these things are going to be appearing frequently. So, you know, you just wait and collect your winnings. So, you know, you want to wait till you get an opportunity where the market is near the 20, till it's near the brown line. Now I'm going to short it, and this should hold for a while. You know that you'll be right here, you'll be right here, you'd be right here again. So again, once you're at the brown line, and that was a trade I made. And again, you can go for, I'll be cautious, so I'll just bank the money if it reaches the same low that we had previously. And again, you know, that's 40. Again, that's 60 euro gap there. Or you could go, since I'm in a downtrend, I think it'll go down a further 60, and look to be making look for Xwin to be like 120. So that's one example of how you get Xwin and Xlose. And there's more. On top of this, we have to manage bet sizes. If you have a pot, the total amount of money that you have to invest in risky stuff, to bet effectively, well then you want Xlose, the amount you might lose from the bet, divided by the total amount of money you have, to be less than or equal to 0.05. So if you have 100, you don't want to risk more than 5. Actually, this should more be 0.01, but I tend to be trading aggressively, since only a small part of my total risk money is in my trading account. So my trading pot is maybe 0.1 of my actual pot. So there's actually more money sitting behind to support my trading money. So this is important, since otherwise you do get 10 unlucky results in a row, often enough, which will take you out of the game. So that means that, you know, if you are more aggressive than this, just due to the way randomness works, you'll be wiped away. So to protect against that, we manage bet sizes. We don't stake, we don't risk more than a couple of percent. Some places will use the you're not allowed, you don't risk more than 1% in any one day. So, you know, there are slight variations of how to implement it, but be aware that you will get 10 very unlucky results happening one after another a couple of times a year.